The Indian market sees a sharp sell-off at the open following weak cues from Wall Street and Asian markets. Sensex trades below the budget day low. Mid-caps are the worst performers this morning.
Titan slipped nearly 2% but has recovered from the lows of the day after its quarterly results, which were in line with already muted expectations. But the management tells CNBC-TV18 that they see encouraging signs for the remainder of the year.
LIC Housing Finance down nearly 6% after posting its quarterly results. Disbursements are down 30% sequentially. The management believes in clocking 10% growth in assets under management for the year seems challenging.
Bharat Forge is down nearly 5.5% after North America Class 8 truck orders fall to a 15-month low. The orders have declined on a year-on-year basis for the second straight month.
Delivery climbs nearly 2% on the back of good operational performance. In the first quarter, the company reports its third straight quarter of positive EBITDA. Net profit aided by change in depreciation method.
Hello and welcome to Chartbusters on CNBC TV18. I'm Hormas Patakia. With me is Mangalam Malu, and in line with what the global markets are selling off, the Indian markets are also showing a similar picture. It's red all across the screen, as you can see above us as well. The broader markets, the benchmark indices, all of them seeing some bit of selling pressure. The Nifty now at 24,274. The key level to track here is 27,074, which is the budget day low on the index. The Nifty Bank is down over 2%. The broader markets are also seeing some selling pressure. The mid-cap index is down 2.5%. The small-cap index is down 3%. The indices, the sectoral indices, realty, PSU banks, metals, auto, all of them seeing losses of well over 3% in today's trading session. So not a good looking screen whatsoever. Some of the top losers on the Nifty: Tata Motors is down 4.5%. Hindalco, after the downgrade that came in this morning, is down 4%. ONGC is reporting results today, is down 4% as well. So not a good looking screen whatsoever, but there are some stocks that are bucking the trend as well, Mangalam.
There are some stocks which are bucking the trend, and they belong mostly to the FMCG pack. The FMCG pack has been a rank outperformer over the last couple of months. We've been talking about 5 factors that are working for them. One, increased focus on rural, sustained continued impact or continued containment of inflation, so to say, improvement in sentiment. So far, monsoons have been pretty good, and all these factors are pointing towards a good recovery in the second half of trade, even as companies are looking at some sort of price growth coming back and margins improving as well. Everyone's eyeing top line growth, and as we see, all these FMCG stocks are doing well. So if you're looking at the FMCG screen, absolutely green, but everything else is not doing particularly well, as you pointed out, Horma. So we can say we're down. Safe to say we're not quite out yet, because we're above the budget day low. We're just below the 20-day moving average, and with the kind of rally that we've seen earlier already, I mean, just 2 days ago we were at 25,000 on the Nifty. So maybe some give back of gains which are taking place. The one pocket I'll be watching out for in particular would be the mid-cap end of things, because we've seen more stocks, way more stocks declining than the number of stocks which are advancing right now. But that number too, from the mornings, we've seen a lot more stocks recover. So when we started out, we had about 100 stocks in the green. That number has increased to close to around 271 stocks. So maybe people are looking at dips as entering opportunities. But we're not the experts. The experts are joining us right now. We have Shivangi Sada from Motilal Oswal joining in for a quick technical check on the market. Shivangi, understandably, there has been a sell-off led by global cues, global factors. At what point, does it make sense to go ahead and initiate long positions, or would you suggest stay away from a falling knife?
Very good morning, Mangalam and Hormas. Thank you for having me. So we've seen that, global markets have caused a dent to our markets, and somewhere selling pressure is intense that we've seen after the gap down. Also, we've seen more selling over here. But of course, the budget day low, which is 24,074, that level becomes important, and that would be the next support that we're looking at. Although hurdles are quite much intact, because call writers are increasing their position as well in the index. So we are looking at 24,500 as the immediate hurdle, and 24,074 as the immediate low for the index to trade. Now, talking about Bank Nifty, we've seen that this index has been underperforming from quite a long time, but relatively we are seeing that there is more strength here as compared to the broader market. So which is why we are expecting a little downfall, not much of a steep fall over here. But yes, 50,000 would be the next support to watch out, and 50,750 as the next hurdle zone over here. And of course, in this kind of market, we are seeing that India VIX had also risen in the previous session and gone above 14.5 levels, which will continue to cause some sort of concern in the market. And we are looking at some, today India VIX is, up again at 17.5 levels. So we are looking at some pockets like FMCG, of course, one sector which you closely track, Manglam, and the next would be pharma space, which will outperform this kind of broader market.
So do your stock picks belong to these sectors as itself, Shivangi, or are there other falling knives that you want to catch?
Yes, absolutely. So my sectors are these only, and the stocks which I'm looking at is Godrej CP. This stock has come out of its consolidation of the last 9 sessions, and good amount of longs are being built up here from the morning itself. And we are seeing that the stock is, respected its 50 daily exponential moving average quite well. And of course, with the entire FMCG pack in action, we'll get a tailwind from that as well. So recommending a buy here with a target of 1540 levels and a stop of 1445 zones. Now, the second pick would be Sun Pharma, where we are seeing continuous strength over here, Poland flag pattern formation on the daily frame, and good follow-up action. We've seen a breakout in the monthly frame, so the potential upside is going to go long, and there is quite a lot of upside scope still left in the stock after the breakout. And we are seeing that, this stock has been showing good amount of volumes from the last 8 sessions, which clearly indicates that buying has happened and support-based buying is quite strong. Recommending a buy here with a target of 1825 and a stop of 1720.
Godrej Consumer and Sun Pharma, the 2 recommendations from Shivangi. Thanks a lot for that, for your stocks as well as the indices as well. Now, let's shifting focus to our special segment where we get you a few ideas for profit from Money Control Pro. Madhuchanda Dey of moneycontrol.com joins us to talk about a stock that she is tracking very closely.
We are talking about IndusInd Bank that had a soft start to the fiscal given the deceleration in the loan growth. The management attributed the same to heat wave and the election disruption, which led to sluggish disbursements in vehicle and the microfinance book. However, thanks to the deposit catch-up, the credit-to-deposit ratio has moderated, creating headroom for growth as the bank is quite confident of growth catch-up in the remaining part of the year. Net interest margin, fees, as well as asset quality were all stable. However, asset quality warrants close monitoring given reports of stress developing in certain pockets of unsecured retail. Due to the sluggishness in earnings, cost-to-income ratio looked elevated, although the management hinted at peaking out of operating expenses. While we expect some moderation in the near term in its return on assets or ROA, should the bank succeed in negotiating the challenges coming from stress building up in few pockets, the stock has enough room to re-rate given its undemanding valuation.
All right, let's see whether that happens or not, because currently we're seeing a fresh round of sell-off, and most notably in the IT pack. So you just pull up something like, Infosys, that's at the low point of trade. We're seeing some, decline even in the banking pack. So we have SBI, which has moved to the low point of trade. Axis Bank has been trading lower as well. So at the low point of trade for, the IT pack, as well as some of these banking names that we're speaking about. We're talking about pharmaceuticals being a bit of, space of strength right now. But in that as well, individual names, the ones most notably impacted by results, are falling further. So case in point, something like a Devis Lab, which is also down about 4%. And the Nifty Bank now down 1,100 points. So the Nifty making its losses move towards that 500-point mark. So 2% lower. It's a fresh round of selling that we're seeing. The Nifty Bank at low point of today's trading session, with the Nifty falling about 500 points. A fresh round of sell-off coming back in the IT space. Hormaz, anything that you're picking up from the globe?
The one pocket that I wanted to mention before we get to the globe, though, about the pharma pack that you mentioned, Newland Laboratories is one stock that has been bucking the trend. It was up almost 8% on Friday after the results, and positive commentary from the management. It's up another 3.5% today as we speak. So that is one stock that is bucking the trend. The index heavyweights are leading the stock. The index lower, of course, Reliance, HDFC Bank, ICICI Bank, Infosys, all of them contributing towards the index downside. The Nifty now moving towards 24,200, and Samvardhana Motherson is the one stock that I wanted to point out. That stock is now down 8.5% as we speak, and that is also because some bit of rub-off coming in from the global parent as well, the Sumitomo Corporation. That stock is down 14% in the Japanese markets. And that is having a bit of a rub-off on this stock as well. So some fresh bit of selling coming in on the benchmark index as well as some specific stocks as well. But time for a short break here on Chartbusters. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back. Back with us here on Chartbusters, and Mangalam was just mentioning some selling coming in IT stocks, and that is also because of the Nasdaq futures that have slumped to the lowest point of the day, now 650 points lower, almost 4% down on the Nasdaq futures, almost 700 now as we speak, 3.75% lower on the Nasdaq futures, and that you can see is rubbing off on the IT stocks as well. The IT index now down all over 3%, a 1200 point cut on the Nifty IT index. But then there are plenty of earnings reactions also that are coming in today's session. Titan is one of them. It was a muted quarter, but in line with some already muted expectations. And Mangalam, what does the fine print look like?
Absolutely. It was a muted quarter. The good part is that it wasn't much worse than what the street was anticipating, and largely because the company had already given us their first quarter cheat sheet. Thereafter, we saw a big cut in the stock price, and thereafter there was a recovery that came by post the budget announcements that happened as well. So if you just take a look at the numbers, 12,000 crores on the top line, a little below street expectations, but nothing really to worry about. EBITDA at 1,200 crores were actually a little better than street expectations, and net profit at 770 crores also was better than what the street was expecting. What was good about these numbers that the gross margins and EBITDA margins were stable for the company. Jewelry EBIT margins, if you account for the bullion sales, etc. as well, it's actually an improvement of close to around 20 basis points year on year. Then we are looking at festive and wedding season ahead, along with the tailwind of lower customs duty announced in the budget. What wasn't very good was that there was studded share, which was at close to around 26% itself. Buyer growth at 2%, and high value solitaires sentiment was subdued, telling you there could be perhaps a bit of an impact of lab-grown diamonds. We spoke with the management this morning, and they did say that they are seeing a noticeable uptick, double-digit growth in the second quarter, and definitely more so in the third quarter, given there would be the festive season. There is increased competitive intensity, so they haven't changed their margin guidance, but that is something that the street will most notably keep an eye out on over the next couple of quarters, where the margins do recover even despite competitive intensity.
Indeed, at 1.5% lower, Titan, not as bad as the other constituents of the Nifty is. But the other stock that you're tracking, Mangalam, is Britannia. And what about that?
Britannia, the results weren't bad. Results actually on the volume front were very good. 8% volume growth is what the company, reported. The stock has recovered from the lows, currently sitting with a gain of almost 1%. That's because the conference call is currently underway. The amount we could hear just before the show had started told you that the company is saying that the strategy will continue to remain, that of driving top-line growth. Commodity costs are going up marginally, but they are manageable at around 5%, which is the inflation expectation for this year. They are stepping up investments on brands and innovations, and they continue to target 2% cost efficiencies every year as well. The market share gain that they had in rural this time around was 25% more than urban, so that's a positive. They've increased their direct reach in rural too, and at the same time, they are closely monitoring the commodity situation. So let's see how that goes, because year on year, while there has been a noticeable increase in commodity costs, what really has stood out is quarter on quarter, there's been an increase in palm oil, sugar, as well as cocoa. So those are a couple of things that the company will be managing going forward. But they believe that the industry is poised for good growth in FY25, led by one, better monsoon, moderate inflation, and third, reducing unemployment. So all these factors working well for the FMCG industry, in that Britannia likely to benefit a lot more given their presence in rural India.
A key beneficiary is Britannia, and showing in the stock price as well, bucking the trend in an otherwise weak market, 1% higher on Britannia. But the other stock on our radar is Divi's Laboratories, and the pharma company shares have dipped over 3% on the back of their first quarter results. Ekta is here to give us a lowdown on how the numbers were. Ekta.
Thanks for that. Well, for Divi's Labs this time, the numbers probably missed estimates a little bit, but the commentary was positive. The revenue was up around 19%. Street was anticipating 23% growth. EBITDA came in at around 622 odd crores, and the margins 29.4% versus estimates of around 30 odd percent. Profit for 30 crores. The street was anticipating 480 odd crores, and it was below estimates because of higher tax expenses as well. Now, the commentary, however, was positive. They are seeing opportunities emerge from the Biosecure Act. as well as opportunities in phase 2 and phase 3 molecules. They are possibly looking at GLP-1 drug opportunities as well. So all of that has been positive in terms of commentary. They also maintain their double-digit growth guidance for FY25. However, there are some concerns with regards to valuations, considering it's at around 60 times FY25 PE, and hence there is some amount of profit booking taking place.
Some amount of profit booking taking place, 3.5% lower on Divi's Laboratories, 48.10 on the stock as we speak. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back.
Welcome back. The market sell-off is intensifying. Moments ago, we spoke about the Nifty being down 500 points. Look at it now, 575 points. At the low point of trade, just about 70 points away from the budget day low of 24,074 as well. And at the same time, the Nifty Bank, that's been the key culprit, down by almost 1,230 points, 1,280 points as we speak. What is it that has led the last leg of decline on Nifty Bank? It's HDFC Bank. HDFC Bank was holding up one end of the Nifty Bank, but now that seems to have been given in as well, down at the low point of trade for that stock. So we'll keep an eye out on that one among the sell-off that we're seeing in other heavyweights that include the likes of IT, etc. Meanwhile, from the broader markets, the one stock that is looking weak right now is Trent. It's down about 5%, had seen a big rally all of last week on hopes of it entering the Nifty, etc. as well. It reports its numbers, this week. So let's see how that pans out. Down about 5%. So wherever there have been profits made, profits are being taken out, and that's the accelerated sell-off that we're seeing. But talking about earnings, ONGC is the stock to watch ahead of its first quarter earnings today. Sonal joins in with the earnings estimate and the outlook. Sonal.
Thank you for that. For ONGC this time around, it's expected to be a sequential decline across all the parameters. Revenue is expected to decline by 9%. The EBITDA is expected to be flat, but the margins, they will come in at 49.6%. Profits also expected to decline by 15% on a quarter-on-quarter basis. The EBITDA decline, this will be led by lower production that has been plaguing the stock for a while, or the company for a while as well. Lower oil production is also something that could hit the realizations this time around. Overall, crude oil sales volumes are expected to decline both on a sequential and on a YY basis, while the gas volumes, which saw an increase last quarter, will also decline both on a quarter-on-quarter and on a YY basis. The sales of value-added products is also expected to decline by 4% on a YY basis. The important commentary will be awaited for the production that they are doing in KG Basin. If there's any delay there, that would be taken as negative. If the oil prices decline below that $75 per barrel, that could also be a key risk. But of course, we do see it averaging out at those levels in the last couple of days as well. Gross crude price realization is expected at $82.8 per barrel, which is an increase of 2% on a sequential basis. Net oil price realization post the royalty, the windfall taxes that we've been talking about, is expected at $51 per barrel this time.
Keep an eye out for that, Sonal. Thanks a lot for that preview for ONGC. The other one that's reporting results today is Marico. And Mangalam, what do you need to watch out from there?
Well, Marico, we have the first quarter update as well, and the stock is doing well ahead of its numbers. The street expects improved performance on both top line volumes as well as revenue, because the domestic business actually saw a modest uptick in underlying volume growth. The overall revenue that we are working with is close to around 8% in terms of a growth. EBITDA grows a tad higher. We're looking at double-digit EBITDA growth out there. 10% would imply 631 crores on the EBITDA, and that means that the margins would be close to around 23.5% as well. The net profit on the back of that grows to around 460 crores. This compares with a number of 436 crores same time last year itself. What is it that the volume that we're looking at? The company did say that they're looking at mid-single digit volume growth, so that's exactly what the street is anticipating, 4 to 5%. Parachute oil did well, Saffola oils did well, value added had a soft start, so let's see whether that recovers or not. Management commentary on new businesses and consumer recovery would be extremely crucial. But just before we wrap up on this edition of Chartbusters, we'd like the director to pull up the India VIX. That's the one that has risen the fastest. There is a fair amount of volatility. The Nifty now down 600 points. So the sell-off for the market continues. The India VIX has moved to the high point of trade with a gain of almost 32%. So from the time we started the show, it's jumped almost 2 or 3 points, up 5 points now, closing in on that 20 mark. So volatility is the name of the game, Hormaz.
Indeed, and that's the word of the day as well, I guess. Now 35% higher on the week's, closing in on the level of 20. But with that, it's a wrap on this edition of Chartbusters. We leave the Nifty just 50 points away from the budget day low of 24,074. But from Mangalam, me and the team that put this show together, thank you so much for watching. Trading Hour up next.